Good morning, welcome to the Market View for Friday the 11th of July 2014. Starting off with the 30-minute chart from yesterday, we had another short and the market going down to the 20 pip level. As I said in yesterday's Market View, 20 pips seems to be the maximum on a trade at the moment. So yesterday the market trading down to the scalp level, offering the 20 pips for the pound and then rebounding after the midday announcement on interest rates, which you can see there, the market returning at least just over 50% of the move. And in the daily chart, we've got the market stuck in this sideways range. You can see the market there holding at the 76% range there. I just want to pop in the one for the downside there, and you can see that 76% is the 171 level there, where there is some sort of support. So we're stuck in this range, and we have been now for the last 8 trading days. So it's a case of waiting for the market to break out of this sort of congestion and consolidation phase. In the economic news, we have nothing today, just an Italian bond auction. So again, fairly quiet day. So if you get 20 pips from any signal, it may be worth considering taking, as the markets are so quiet at the moment and range bound, which is the most important thing there. Of course, it's going to break out at some point, but you'll see that in the price action in the smaller time frames, because the market will drive through these areas, which is why it's so important to have these to hand and know where the market is trading in relation to it on an intraday basis. In the Dow Jones, yesterday we saw the markets move sharply lower, and this was the reason. Global stock markets hit by Portuguese bank concerns. And if anybody thinks that the banking crisis of 2008 is over, then you're living in cloud cuckoo, because there's a lot more to break as far as this is concerned. On the implied volatility front, we've seen the market move lower, so that means the volatility will move higher, and we've got the historical up to 6.23 and then the implied up at 9.58 for yesterday as well. In the Dow chart, we've got the market moving sharply low. We can see this, and I'm just going to draw in from the low to the high, and you can see they're trading down to the 76% area, then finding support and being brought back up during the afternoon session. The down move occurred in the late morning, early morning in New York, and then 2:30 the market was bought back, and we see prices moving back to the upside there. So that's it for this morning. It's been a good week as far as the markets are concerned. We've had at least 60 pips so far in the pound. And also the Dow has given close to 80 pips as well, which I'll be talking more about in the coming weeks as well. Now we're sort of finalising the strategy timeframes and so on. Right, well, have a good weekend. I will speak to you on Monday. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching.